Following the biggest one-day loss on the S&P 500 since October 4th, we advanced a little bit, up a third of 1% on the S&P, advancing 17 points on the Nasdaq 100, up about 100, advancing 0.6%. This is your little bounce back after the inflation surprise of yesterday. Inflation in America with a 6 handle, the sticker shock got everyone's attention. Let's talk about the bond market. Closed today for Veterans Day. Switch on the board and get to Europe. The bond market backing away from zero again. It was in and around negative 10 basis points at the start of November. It backs away to about negative 25. In the Italian bond market, about 95 basis points. We were as high as 1.2% through that level, through 120 in the last couple of months, and we back away again. December's going to be absolutely fascinating. On the 15th, the Fed decision. On the 16th, an ECB decision, and then you can call it year over, unless, of course, there's a negotiation in D.C.
Excuse me, John, for you, it'll be year's over. You're going to be on Capri.
Year is over. I'll be getting the flight after the ECB decision. Switch at the board and get to euro-dollar. Euro-dollar, the shape of things as follows. How do you push through the potential for divergent monetary policy, if that is indeed how things evolve through the next 12 months? Euro-dollar at the lows of the year. We have a 114 handle, 114.69 TK. It's a weaker euro in the mix again this morning.
Very good. On this day of remembrance, in here with the equity markets moving and bond market closed, really, really interesting. John, how does the stock market move with the bond market closed?
We don't get those worries, those jitters off the back of sloppy auctions like we got yesterday.
Should the stock market be closed today?
Yes.
Thank you.
Because then we'd get off.
Thank you, Lisa.
No, it's a disgrace.
On a serious note.
It's a disgrace.
Do you think it is a disgrace, Tom?
Yes, I do. It's absolutely dumb. I mean, I don't know what Romaine thinks about this, but come on, the bond market's closed. Take a day off.
I don't know if he's as fired up as you are right now. Take a breather. Euro dollar 114.69, down a tenth. That's the cross asset price action. Let's get you some single names, some movers this morning, and say good morning to Romaine. Morning, Romaine.
Hey, good morning, John. And yeah, Tom, the market, at least the equity market, is still open here. Moving this morning here, Disney, probably the big disappointment of the day. In fact, it's probably been one of the bigger disappointments on a yearly basis as well here. They came out with their earnings here. Obviously, everyone was focused on Disney Plus. They got up to about 118 million subscribers. That was well short of what the street was looking for. Remember, they have a goal here of getting to 260 million subscribers by 2024. So you got to basically more than double off of a $100 million base, 100 million person base right now. To get to that, Bob Chapek basically says, don't worry. They're going to expand Disney Plus into new markets, international markets. They also have a new slate of products coming out, content coming out that should help them achieve that number. But this is a company right now that is now running a huge loss in that direct-to-consumer business, and that's a bigger concern here as well. That loss was much more severe than what the street was looking for, and Bob Chapek basically made it clear they're going to spend a lot more money to achieve what they needed to achieve. Then there's the whole ballast of the parks business. That was supposed to be what was supposed to help them. They actually had a much smaller profit than what the street was looking for. A lot of that because of concerns about what's going on in their international businesses. The idea that some of those international parks didn't have as much of a smooth reopening as the parks here in the U.S. Anyway, you add it all up. This is a company really being battered now by slower growth and rising costs here. We'll see how this all shakes out. Tesla, here's how it's shaking out. Up for a second straight day. Confirmation that Elon Musk did indeed sell some of those shares here. Keep an eye on the put-call ratio here. That's been creeping up higher, and a lot of the short interest starting to come back into the stock. And Beyond Meat, a huge disappointment off of the earnings last night, down 19% here in the pre-market. It was already down 50% prior to today from its all-time high. Flip up the board here. Let's take a look at Open Door Technologies, which pioneered that iBuying business, that iBuying technology. That, of course, felled Zillow last week. Is not really felling the Open Door. They reported earnings. They seem to be doing okay with their algorithms. Beazer Homes unchanged here on the day. Of course, they make a lot of entry-level homes here. And Affirm Holdings up about 26% here in the pre-market. Wow. They reported earnings. The EBITDA was actually very disappointing, but they actually talked about an expansion of that relationship, guys, with Amazon.
That'll be fascinating to see. To me, Affirm is game-changing. And I'm clear, I don't own. I wish I owned shares, Romaine, but
it's never too late, Tom.
I'm in the triple leveraged all cash. I'm looking for an entry point. Romaine Bostic, and with a close this evening as well. It is Veterans Day, and there are firms that are each indifferent, and they all have military types running them. or military types as employees. No one does it, though, like Academy Securities. Chance Mims and the team with a board that is heavily military-based, including General Tata, even though everybody seems to be from Annapolis. And on this Veterans Day, we are thrilled to welcome their head of global macro strategy, Peter Cheer. Peter, what is different about Academy Securities? Explain, not on Veterans Day, but the day-to-day difference of your shop with its military San Diego background.
You know, it's a really fun and interesting place to work. So our entire C-suite is veterans. About 50% of the firm is veterans. And they instill kind of a behavior and expectation of, how to act. And it's really good. We still have firm-wide calls to make sure that everyone's informed on what we're trying to do. And it's responsibility of the non-veterans to mentor veterans. So my job is always to work with one or two veterans and get them up to speed on how Wall Street works and find good roles for them. So it's really neat to be part of that overall challenge. And then on top of that, we have 14 retired generals and admirals who serve as our geopolitical intelligence group. So we get to plug into them. And that's really helpful for what I do. There's some stuff that's very geopolitical focused, but there's a lot of great overlap. And it's been super helpful in analyzing what's going on with China and now Russia, Saudi, what's going on with oil. So it's been a really fun and interesting place. And to watch the growth trajectory has been awesome. And I'm lucky to be a part of it.
Okay, so you're going to brief General Tata this morning. Let's describe this inflation, Peter Cheer, and what it means for retirees, what it means for pensions. Does cost of living keep up or not?
I think this inflation is a multi-year process that we are working our way through. I think two things that have significantly changed that people are just starting to dawn on are, one, China had been an agent of deflation for years, if not decades. That has changed. I don't know that they're actually going to be inflationary, but I don't think they support the deflation story any longer. And then the other part is this transition to ESG is really inflationary. So right now, Europe's particularly dealing with underinvestment in traditional energy, so that's going to be spending. But when you look at anything coming out of COP26, our own infrastructure budget, there is going to be a lot of spending and build out to get us on a sustainable energy path. That is going to be inflationary. So I think this is a multi-year thing that we have to deal with. And so far, no one's coming to that realization, though more and more people are creeping that way. And COP26 seemed to solidify at least the ESG as inflationary argument for many.
Probably the strongest way that perhaps you are presenting this thesis in markets is your outright short bet on 30-year treasuries. You said over the weekend that you actually believe that this is the way to go. Yesterday seemed to edify that with a pretty strong move after the really messy auction. How much further does it have to go?
I think we should see the 30-year back above 220. I'd like to see the 10-year towards 170, 180. I think right now there's this balancing act. We saw a little bit of it occur yesterday where when CPI hits, the front end yields go way higher and the back end doesn't respond much. If anything, we got a very significant flattening because I think people still have this expectation that the Fed is going to hike and that's going to slow down growth. I think the Fed is going to pound into us over the coming weeks and months. They are not going to hike, which means the long end of the yield curve has to bear the brunt of this inflation pressure. And I think that's the next wave. So this is all very difficult to trade right now because there are, as Bloomberg points out almost every day, new stories about macro fixed income hedge funds getting in trouble. So there's a lot of noise within this trend, but that's the trend I'm looking for.
Pete, this is a really interesting thesis because a lot of people will say if the Fed does hold on and doesn't raise rates, then what you get is they will have to raise rates more quickly down the line. They will have to respond and curtail growth more dramatically, and that could actually lead to even lower long-term rates. Why do you push against that?
Partly because whether it's Powell or whoever else is chair, I think the decision is if I hike today and the economy slows, everyone's going to look at me like I was insane and I slowed the economy. So I think no matter what their models say, no matter what pressure they get, deep down, it is very difficult to be the one to hike. And he's told us over and over again, right, that first they're going to be done tapering before they even think about hiking. And somehow the market kind of refuses to listen to them. I think the market has too many people who grew up with a different style of Fed, a Fed that had a different reaction function. And this is a new Fed. It's a new reaction function. And they are willing to let things run hot because they're too scared to be the ones who slow this down.
Pete, Chairman Powell, does he get a second term?
I think he should. I think he's done a very good job. I think he managed us through the pandemic. And one thing that doesn't get talked about enough, in my opinion, is he actually tried to hike rates. He tried to normalize, and he had to back off. So he's got some experience with the attempt to normalize. So I'm not sure why you bring in someone new. And when we talk about, we maybe need someone more progressive on the Fed, first, I'm not even sure what progressive on the Fed side would mean. I think the Treasury Department's supposed to be progressive. If we want to do progressive policy, change things around, that's the, Treasury's job. The Fed has a mandate. We should stick to that mandate. And Powell's done a good enough job, has the respect of markets. I think it would be disruptive to replace him.
John, this is important. Peter Cheer, Academy Securities, with all they do for military, some really important service there. John, it says surveillance road trip March 31 of next year when the Padres open against the Giants at Petco Park.
Why is everything a stop on the global tour of Tom King?
We can fold in here Peter Cheer, who's always interesting.
Fantastic.
Chance Mims and the team. Get some brass out there from their board of directors and go see go see Tatis rather. It's opening day, Giants Padres.
Pete, would you like to make that happen?
That would be awesome. We can get some of our other generals there. We've got some cyber generals. We've got General Spider Marks. Lots of people. San Diego's awesome. I'm headed there next week. So we'll get this set up. And the Padres can't choke like they did last year, hopefully.
Yeah, they choked.
I'll do as I'm told.
They did.
Go on, Lisa.
I want to see Tom Keen's Wikipedia searches. I think that it would be fascinating, as different people speak. Which game coming up?
Can you imagine?
March 31st, 2022.
Look, I was sitting there on Fifth Avenue yesterday talking to this guy from Australia, I can't remember, and I had my Padres hat on.
Was he from Perth?
He's from Perth, yeah. He's from the other side of Australia. But the issue here, folks, is come on. What Academy is doing is original. You got to see more of this, frankly, across all industries.
I think it's fantastic to catch up with Pete on Veterans Day. Peter, thank you.
And
Send
March
my best
31st
to the team. Peter Cheer
year.
of Academy Securities. I've seen that Padres hat and the Padres T-shirt in a restaurant.
Yeah.
The south of 58th, too.
Really?
Yes.
And they did choke.
So a few drinks were consumed by one of us anyway.
But I've never been to Brooklyn.
Just shouting across an Italian restaurant. New York just looks beautiful. Good morning to you all this morning.
Beautiful on radio.
Up 16 on the S&P, advancing a third of 1%. This is Bloomberg.